In lesson 3-2, we're going to continue working with our journal and entering transactions that we worked with the last couple of chapters. The first one is buying supplies on account. So January 5th, we bought supplies on account from Canon Office Supplies, $220, and we had to fill out memorandum number 1 because it doesn't fall under any other source document. The accounts affected, our supplies, is going to go up, and this is we covered last chapter, and our accounts payable for Canon Office Supplies, what they owe us is going to go up. So we're going to debit supplies, credit our accounts payable account. The 4 things you do when you fill out a journal, the first thing is to write the date in the date column. And remember, since this is line 4 and it's not the first line of your journal, all we have to do is write the date, is the 5th. Record the debit amount. We are going to debit supplies. Since there's no special amount column for supplies, we will go our general debit. Anytime we write something in our general debit or credit column, we have to identify it in our account title. So that $220 goes to our supplies. Our credit is our next thing, is we are going to credit our accounts payable. You will notice there's not a special amount column for accounts payable, Canon supplies, so we have to use a second line of our journal for this one entry. We will record the credit in our general credit column, and again, we will identify the account affected in our account title. The 4th thing is to write the source document number. It's memorandum 1, so we will write M1. If you will notice this transaction, every entry into your journal only has one date. So you will only write the 5th or the number 5 for the date on the first line. And this goes to show that supplies and accounts payable belongs to this one transaction, even though we had to use 2 lines. Our next transaction is paying cash on account, and it reads, paid cash on account to Canon Office Supplies, $100, and you wrote out a check. The 2 accounts affected, our accounts payable is going down because Canon Office Supplies owes you less. Your cash is going up, your cash is also going down, so you're going to credit that because you paid cash. Again, to enter it in our journal, you write the date, which is the 9th. You write the debit. We are going to debit accounts payable, Canon Office Supplies, so we have to go to our general debit. Again, we will identify where that $100 goes to. It goes to accounts payable, Canon Office Supplies. We will credit cash, and so therefore we will go to our special amount column, cash, and we will write that amount in there. Remember, you should be filling in the zeros for the cents. Do not use a line or just leave it blank. You need to fill that in. And again, with our amounts, we do not use decimals, commas, or dollar signs. And then the last thing is writing the source document number in the document column, which is C3. When I take away all that, it looks like this. We have a cash credit and a debit to Canon Office Supplies, which is our accounts payable. The next transaction, we receive cash from sales. We did our sales for the day, we received cash, and so the transaction looks like this. January 10th, received cash from sales, $1,100. We filled out cash register tape 10, or we added it all up on the cash register tape, and it's number 10 because of the date right here. So it's cash register and the date. The 2 accounts affected, cash is increasing, our sales is also increasing. So we will be debiting cash, crediting sales. The 4 things we do when we enter something into our journal, or we enter our transactions into our journal, is we write the date. Today is the 10th. The debit amount, we have a cash debit, so we're going to go over to our cash debit column. We have a credit amount is sales. And you can look, this is the first time we're going to be using this column right here. Sales, we are going to credit. We go to our sales credit column and we will write that amount in there. Since we use two special amount columns and there is nothing in our general debit and credit, we do not need to write a title in our account title, but we must write something in there to show that we just didn't forget about filling the blank in. So what we do is we put a check mark in our account title. It does not get centered, it just gets written off to the left side, just like it would be if it was an account. The check mark just identifies that you use two special amount columns and you don't have to identify another account. When you do that, you will also put a check mark in your post reference, and that will be explained a little bit more once we start using our post reference column. The last is to write our source document in the document column, and it is calculator tape 10, so we write T10, tape, and then the date. So when it's cleaned off, it looks like this. And again, remember, we use the check mark here because we did not use anything in our general debit and credit. We know by looking at this, we are going to debit cash and credit sales. Our next transaction is sold services on account, and it reads like this. Sold services on account to Main Street Services, $500, sales invoice number 1. Again, our accounts receivable is going to go up. The amount that we're going to receive at a later date, Main Street Services owes us $500. And our sales is also going to go up, so therefore we're going to credit sales for $500. Going through the steps again, number 1 is to write the date. The date is the 12th. The debit part, if you look up here, we have a debit to our accounts receivable, Main Street Sales. We don't have a special amount column for it, so it will go into our general debit, $500. Again, anytime we write something in our general debit or credit, we must write the account title in the account title column. Our credit up here, you can see it goes to sales. We have the special amount column called sales, and it is a credit. So we're going to write that credit amount in the sales credit column. Source document number is next. You can see it is sales invoice number 1 from our transaction, so we will write S1. Take away all the arrows. It looks like this. We are going to debit $500 to accounts receivable, credit our sales. And we have everything filled out. We have the date and we have the document number also filled out. Paid cash for an expense. Paid cash for communication bill, including cell phone and internet services of $80. Our two accounts affected, remember expenses will be debited for $80, which is increasing it. Cash will be decreased because we paid cash $80. Right, the date is the 12th. Our debit amount, since it's communication expense, we do not have a special amount column for that, so we will write it as a general debit and identify the account title, communication expense. Our cash will be credited, so we will go over to our cash credit column and we will write $80 in there. The 4th step again is to write the source document number in the document number column, and that is C4. And it looks like this. We have a debit to communication expense, a credit to cash. Writing it out for a second expense, paid cash for equipment rental. Again, the expense, equipment rental, will be increased, therefore debited. Cash will be decreased. And again, writing the date, which is the 15th, we will debit our equipment rental expense for $400 and identify that in your account title. We will be crediting cash for $400 and the check number 4. So again, both expenses are treated the same way. You will debit the expense, credit the cash. Receive cash on account is our next transaction. Receive cash on account from Main Street Services, $200, receipt number 2. Cash is going to be increased because we receive cash. Accounts receivable, Main Street Services, will be decreased because they are decreasing the amount that they owe you. Right, the date is the 16th. Your debit amount is going to be cash. We have our cash debit because we receive cash. So we will write our $200 in our cash debit. Our credit here will go to accounts receivable, Main Street Services. Again, there's no special amount column for that, so that'll be a general credit. When you write something in your general debit or credit column, we have to identify the account title. And again, you can use AR on your example paper if you need to, because that's a lot of stuff to write on one line. But make sure you're identifying your customer's name. And then you will write the source document, receipt to. So again, it looks like this. We will debit cash because we receive cash, and we will credit accounts receivable because they're paying part of what they owe. The next one is paid cash to owner as a withdrawal of equity. Paid cash to owner for withdrawal of equity, $350, check number 6. Our accounts affected, your drawing account will be debited because that's going up. Your cash will be credited because that's going down, $350, because you paid cash. Again, the steps, write the date, the 16th. Write the debit amount. The debit amount goes to our drawing. And again, there's no special amount column called drawing, so we will use our general debit, $350. We will identify the account affected by the general debit, Michael Delgado drawing. Our credit amount is going to go to cash. So we go to our special amount column, credit cash. And the source document will be C6 for check number 6. Again, when we take a look at this, you can see that we are debiting our drawing account, crediting our cash. After this lecture, make sure you double check the home page of accounting, and it'll tell you what your assignment is.